Hey, welcome back. Today is February 20th, Saturday, and on this post, I'll be telling you about the overall crypto markets very quickly, which includes Bitcoin dominance and Bitcoin price action before diving into Aave protocol, AAVEUSD, and see what exactly has gone on in this market. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, please do subscribe to this channel and like this video as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I'm purely sharing my own speculations opinions on this market. I cannot tell you the future and you should always do your own due diligence before trading or investing in this market as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what exactly is going on in this market first. Most importantly, I do take a look into Bitcoin dominance. It tells me what the money could be trending into. Would it be Bitcoin, altcoins, or neither? Currently, we do have Bitcoin dominance down very slightly. This breaks down to Bitcoin price action up over 1%, and total altcoin market cap up almost 1.5%. Okay, so this is the upside of Bitcoin dominance trending downwards, even though very mild change today. Okay, the upside of Bitcoin dominance trending downwards would be that total altcoin market cap is outpacing in terms of gains ahead of Bitcoin price action. Okay, so this is why I usually emphasize Bitcoin dominance trending downwards, more ideal for the altcoin price action on both the upside and downside. Now, on the daily time frame, it's still my focus here for Bitcoin dominance because I did mention that there is a possible inverse head and shoulders pattern that could be playing out, as we already do have the left side of the pattern more developed with the right shoulder right here. Okay, now the daily candle here has broken back on top of this daily 21 MA, which is the blue line. The next key resistance here will be the daily 200 MA, which is the orange line. As I've been mentioning, if Bitcoin dominance comes back to test this resistance level at about 64.25%, which is also a fib level, this would tell me this inverse head and shoulders pattern would become more validated and is more likely to play out. Now, as we do see quite a bit of resistances, rejections at the 64.25% area right here. Okay, so very interested in seeing what it could be doing here, and I would not be surprised if Bitcoin dominance actually changes course and goes back up. Not as ideal for the altcoins, okay, because Bitcoin price action has been making new highs. So if money is flowing more into Bitcoin price action, very likely Bitcoin dominance is going to continue trending upwards in this case. Okay. Now let's take a look into AAVEUSD and see what exactly could be going on in here. So I have refreshed the Fibonacci retracement levels for a new top at about $600, excluding this very short outlier here. But I do think $600 is the psychological resistance right here on the daily time frame, more clearly seen. Okay. Now, let's take a look into the higher time frames here from the monthly down to the daily and look for any overbought RSIs or possible bearish divergence scenarios, as these could be bearish signals. Okay. Monthly time frame here, we do have an RSI reading of about 93. Possible bearish divergence scenario here already, as we do have equal tops on the RSI, but with higher highs on the price action chart. We do have a little over 7 days before the end of this monthly candle. So something I would not lose track of. Weekly time frame here, we do have an RSI reading of about 87. Possible bearish divergence scenario here if the weekly time frame here was to make a new high, because the last high RSI reading to beat is about 94, over 94. 3-day time frame here, we do have an RSI reading of about 72. Bearish divergence scenario playing out right here already. So let's see where this price action actually lands. Whenever I do see bearish divergence scenario on bearish divergence on a specific time frame, my conservative estimate is that it's going to come down to the next closest moving average on that time frame. Now, the next closest moving average on the 3-day time frame here would be the 3-day 21 MA, the blue line right here, currently about $275. Would price action actually come all the way back down to this moving average here? It depends on the strength of the bulls. If the bulls are actually strong enough in this market, it could take off without it. Or it could be strong enough to actually hold the price up and wait for this moving average to come up further to meet the price action. Or it could just flop and completely drop down to this 3-day 21 MA. Okay, let's see which of these possibilities would it be. Now, let's go to the daily time frame here, where this is a more clear example of what I just said. We had bearish divergence on the daily time frame here, comparing this high with this higher high, okay, and the next higher high as well. So that's double bearish divergence. Bearish divergence played out. It came even below the daily 21 MA, okay. So, and some more. So it has broken the 21 MA and some more. So this is a example of what I just said in the 3-day time frame there, okay. Now let's take a look into a smaller time frame, the 4-hour time frame, because it's more consolidated and it's more apparent that I do see a head and shoulders pattern. Now I do want to reiterate something real quick, because last time I did mention that there was a ascending triangle pattern, and the measured target of that ascending triangle pattern breakout was about $660. From the daily time frame here, it looks like the price action broke out of that pattern and went to about $630. However, when I do switch over to another time frame here, like the 4-hour, the price action only shows me has gone as far as about $590. So some discrepancy here in the data and trading view there, so you guys can actually note that on your chart as well. But on the 4-hour time frame here is where I actually do see a head and shoulders pattern. Head and shoulders patterns are bearish patterns. Okay, if this price action actually plays out, the measured target here, which is basically taken by the neckline, which I say to be about $400, because I actually can get a trend line across quite a bit of candles here, and I could actually see quite a bit of support here. Okay, so the neckline and the measured target would be measured. The measured target would be measured from the neckline to the top of the pattern here, and then deducting it below the neckline, which will give me approximately $210. Let's see if the bulls are actually strong enough to hold up this price action here. Okay. Now, let's take a look into the bullish and bearish case scenarios. If I want to focus on the 4-hour time frame here, because it gives me a more apparent picture of what could be going on, then I'll be looking for a 4-hour candle close above this head level. Okay, I'll look for a 4-hour candle close, maybe safely to say about $580. That's just a safer signal for me to invalidate this head and shoulders pattern with a higher high. Now, if we can actually go down to the hourly time frame here, then maybe we could look for a hourly candle close above the previous high here, okay, which was about $570. So I'll be looking for, if I'm looking at the hourly time frame here, I'll probably look for an hourly candle close above the $590 level to just to be safe here now, okay? Because that would be a pattern breaker, as we have not seen an hourly candle close since the formation of this head and shoulders pattern above $570. So I'll look for something at about $580, $590 just to be safer on a lower time frame, okay, to invalidate this head and shoulders pattern. That would be the bullish case scenario, okay? Let me reiterate on the hourly time frame. If I want to look at a lower time frame here, an hourly would be the earliest I consider in this case. I'll look for an hourly candle close just to be safe, about 580. I will even say 590 to beat the previous high. Close with an hourly candle close at about $590 here to invalidate this head and shoulders pattern with a higher high. It has to be a candle close though. Okay. Bearish case scenario. If price action starts breaking this neckline about $400 with an hourly candle close, the next level of support I'll be looking at, the next level of key support I'll be looking at least would be the daily 50 MA. Okay. Currently about $300. Okay. There's going to be a few other short-term moving averages in between the breakdown points and this key support I'm looking at, okay, including the 4-hour 200, the 6-hour 200, which is currently pretty parallel with the daily 50 as well. So the daily 50 would be the next level of key support I'll be looking at. But other than that, the 4-hour 200 will be in between the breakdown point and the daily 50. Okay. Now, these are my bullish and bearish case scenarios for today for AAVEUSD. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I'd love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.